Milind Sarwate, founder and CEO at Increate Value Advisor LLP, an independent director, also in many boards advising companies, joining us in the studios. And we also have Sanjay Manyal, Senior Research Analyst at ICICI Securities, joining us on the show. Gentlemen, morning. And Milind, let me kickstart the discussion with you. I mean, how attractive is the FMCG market getting right now? Because from a series of players, we're seeing some mega consolidation transpire now for consumer companies. The FMCG landscape clearly has been changing with, the market size becoming smaller and smaller. Do you sense that the battle eventually would be much like telecom, where there will be 3 to 4 large players and rest all of it would be a combined space?
I feel a couple of things are relevant over here. Firstly, there has been a lot of upheaval in the FMCG market over the past 2-3 years, caused by the trade upheaval which was due to demonetization and thereafter the GST transition. I think things are just settling down. So whatever conclusions we could have drawn in the past 2 years may not have been representative. The second big thing is, I feel as a result of maybe GST, as a result of automation, and as a result of the digital marketing facilities available, I think the cost of trying and failing and entering newer markets, that has come down. So you will find a unique combination, to my mind, of an industry which has some monoliths, some very large players on one side, like HUL or like Daburs and Marico and Godrej's of the world. And on the other side, there will be niche players who will have their specializations and who will hold their own because of their specializations and because of their extreme occupation of a niche. So I feel both things will coexist. There will be some consolidation and there will be some niche play which will coexist.
The way I look at this acquisition is that it's got 2 buzzwords. One, health, and second, food, healthy food, right? And that seems to be the messaging which is even coming from the cola companies, that we want to move away from sugar, we want to focus on health. So is the health space now the go-to space? And if the health space is now the go-to space, then how come everybody is not ignoring the threat which Baba Ramdev will bring because of its Patanjali health and Ayurvedic brands?
I feel health is, it's like being a patriot, everybody says that I am a patriot. So no company will say that we are not selling healthy products. Everybody says I am healthy, and the consumers also becoming wiser. Up to now, to my mind, like we accountants say that to the best of my knowledge and belief. So up to now, most of the health planks were built on this belief.
You're still wearing a CFO hat, right?
Yes. So if you are selling a natural product, then it has got to be healthy. If you are selling an Ayurvedic product, then it is healthy. If you have some vitamins added, then it is healthy. It used to be sold on some kind of a belief. Now consumers are getting more discerning and more testing or verifying. They want to know exactly what is the health component, what is it that being delivered to me. And you have to thank the spread of knowledge because of internet. I mean, most people do a doctorate in Google, so they know exactly what to look at. So I feel that the consumers being more discerning will force companies to offer something which is specific and not just some kind of a marketing claim that things are healthy. And towards that, I feel that the foray of pharma companies who come from knowledge into OTC, into FMCG, that has to be viewed. I mean, the other acquisition which has happened on the sides, which pales into insignificance on this, is the Cadila one, the Zydus Cadila one. I think people who have depth in their portfolio building, I feel they will have a greater claim to success.
Okay, just one more question, Tony. Sorry to interrupt you there. And my question is very simple. The reason why Glucon-D and Complan was sold, because the existing owners were not confident of growing the brands. The reason why Horlicks has been sold is because Glaxo feels that they are not able to grow it, and that's the data which is suggesting that. So what has not worked? Why do you think change of management will make it work?
I feel that for selling products to consumers, especially in FMCG, you need a greater insight into the consumer mind. Pharma companies typically operate problem solution forward. In pharma, these two terms are used. One is a prophylactic medicine and there is a therapeutic medicine. Yeah. Typically, pharmas are good in therapeutic because they have the molecule, they have the knowledge. In prophylactic items which you consume for preventing or it's like more of maintenance kind of a consumption. Over there, the task of demand creation is more difficult because there is no identified problem to be solved. It involves habit changing. It involves wooing the consumer and then retaining the consumer until you want the consumer to be retained. So I feel in those tasks, FMCG companies are typically better. The second angle is of distribution, because FMCG distribution is much wider than the pharma distribution, and impulse purchases are higher in the normal FMCG distribution. So I feel that when companies say that we cannot grow this further and maybe Unilever will do it better, I think they mean it in the sense that the Unilever marketing as well as distribution has been geared to build these kinds of businesses. I also feel that typical non-FMCG companies, they do not build categories. If you see one of the strategies of HUL is to build categories through investment in the category. And there is a discipline of the leaders that HUL usually follows. They build a category by investing in it. So I think looking at all these things, to my mind, healthy products or health generating products, FMCG companies are in some way better placed, provided there is no specific molecule or no problem solution is involved.
Right, but just taking Nikunj's point forward, I'm given to understand that the health food and the health drink market, so to speak, is either way slowing. So Horlicks, when they purchased Horlicks right now, is slowing in a slowing market. What is the scope of scale and the strategy you think they can adopt for bringing about a turnaround if that's a scenario? I get your point on how they are great at investing in creating a market, but if there is not that much demand and it's a slowing sector, how do they prop that up? How do they change that?
I feel the sector has been slowing because of lack of investment, probably. Investment of mind as well as money. It's obvious that in a very large country where middle income is growing and there are more families which are focusing more on kids, etc. Actually, health drink is an issue with every house because kids are not interested really in taking a healthy drink. So how to convert that kid into a consumer of a healthy drink is an issue. And most people may be following some domestic solution. You may be giving milk with something added, etc. Initially, the Horlicks of the world, they were offering something which was flavored. So this category is also called a malted flavored, so MFD. So I think now consumers will need probably something more than flavor. So the category needs to be invested in with a mind, application of mind. Some nuances, some new varieties will need to be added so that the large Indian growing population is able to consume that product with greater attachment. I think if you look at the population, if you look at the demographics, if you look at the data that maybe as much as 4 out of 10 children are undernourished, in micronutrient undernourishment there is even a greater number of say 9 out of 10. I feel there is a market which is existing. We have to also keep in mind that the branded market is not every market. There is a large unbranded market. There are many categories.
I need to interrupt you there and tell you why, because I need to mark a stock change here, and that's Indiabulls Housing Finance, which has gone from 10% up yesterday, another 4% up today. Blink of an eye from 780 to 812, just like bazooka almost. Yeah. 8112 has gone to 780 has gone to 813. Sanjay Manial, good morning to you. Okay, Sanjay, as an analyst now, you got to do your numbers and tell us whether this is a good deal for HUL shareholders or not. And the fact that stock is at an all-time high, is it reason to get excited that HUL has done a good deal which will be EPS accretive?
There is no doubt that it will be an EPS accretive, it will be a margin accretive, considering the fact that there will be a lot of synergies. The distribution network is, HUL's distribution network is much larger than GSK's distribution network. If you will see, the direct distribution reach of HUL is almost 3.5 million outlets compared to 0.8 of GSK. So which itself bring, and then they probably, HUL can really bring the smaller packs and the sachets into the rural market, and then they can increase the penetration. There is also a possibility that they can premiumize the brand. So there are multiple opportunities in terms of distribution is concerned. As far as brand extension is concerned, we believe that there is a possibility that they can enter into the breakfast cereals. They already entered into the breakfast cereals. They can extend the Horlicks brand into that category, and that probably would result in a higher growth for Horlicks with HUL compared to what we have seen in last 2 to 3 years, that the category was slowing, and the Horlicks itself, which is the major market share, which has the major market share, was also not growing very fast. So probably the things will be a lot different in next 2 to 3 years compared to what it was in last 2 to 3 years.
But Sanjay, how soon do you think a giant like Unilever will be able to turn around the fortunes of Horlicks as a brand? Because we all know, studying the financials, as to how Horlicks has been grappling with slower sales.
Yeah, so we don't see, at least it will be coming in next year, because I think the deal itself will take almost a year to complete, and probably post that they can really reduce the cost in terms of overhead expenditure. There could be some common employee expenditure which probably can be reduced, and then there is a possibility of margin expansion also. So though we don't see anything coming in FY20, because this entire deal will be completed in 1 year's time.
Closing comments. If you had to, let's say, think like an investor and pick and choose a food company for us for next 5, 6, 7 years, which is one food company, stock or brand you will bet on?
I feel in the current situation, the nationally strong and sizable stock is HUL. There are other players who have their food place, but they are much smaller. So if you need an absolute blue chip, then it has got to be HUL.
How about this good old comparison between Britannia and Nestle?
Those are food companies which are not as strident as HUL. If you look at the HUL strategy, they seem to be extremely hungry for growth. I think we have to keep in mind that Unilever worldwide is primarily a foods company.
It's only in India
that the picture is actually the opposite. So at some stage they would want to approximate their global food ratio. And if you read Sanjeev Mehta's comment also, he's talking about how big the F&R market in HUL's position is growing. It's crossing 10,000 crores, etc. So I feel internally to HUL there is a very strong desire to take the F&R size much larger. And so I feel, if you look at the purpose of the investment, I would bet my money on HUL.
HUL, everybody's favorite.
It's just one of those markets, Tanveer, where you must acknowledge that it's, for example, you have a big bull run in the mutual fund industry, but you don't have a single global AMC in India. JP Morgan, we know that they were not successful. Fidelity came and they went. Goldman Sachs sold their business to Reliance. And the AMC business is a business where the foreign players or the foreign financial firms have a much deeper understanding of market cycles and process, but they've not been successful. In India also, I think it's a very typical kind of a market. I mean, you have a situation where HUL is becoming bigger because of Unilever, but Kraft on the other side is exiting.
I have a theory. I mean, having worked for long in Indian companies, maybe I am biased towards Indian companies, and I tend to regard HUL as an Indian company because it is strongly run by a very strong Indian management for years together. If you look at the Indian consumer market, you will not find many Western MNCs who have made their mark. So I feel Indian companies understand the Indian consumer better and they are better entrenched, I would say.
Okay, on that note, we could actually go on discussing the prospects of food and future of food and which company to bet on. But great having you on the show. Thank you so much for taking the time.